How to build wealth with index funds. As a popular and accessible investment option, index funds have proven to be a reliable way for investors to participate in the market with lower costs and minimal involvement. By understanding key principles and strategies, even novice investors can harness the power of index funds to secure their financial future. Let's dive into the fundamentals and learn how they can become an essential component of building wealth. Welcome to Braylen AV. If you haven't yet, please like and subscribe. Number 1. Understand what index funds are and how they work. Index funds offer a straightforward way for investors to gain exposure to a broad range of assets. These funds aim to replicate the performance of a specific market index, such as the S&P 500, by purchasing the underlying securities in the same proportion as the index. As a result, investors can build wealth by benefiting from the overall growth of the market. Additionally, index funds have lower management fees compared to actively managed funds, making them an attractive option for long-term investment strategies. Number 2. Decide on your investment goals. To build wealth with index funds, it's important to begin by establishing clear investment goals. Determining the desired return on investment and time horizon are pivotal factors in this process. A well-defined plan not only offers a solid foundation for investing decisions, but also helps in weathering market fluctuations. With a clear vision and a systematic investment approach, people can utilize index funds effectively to achieve financial growth and long-term stability. Number 3. Know your risk tolerance. Knowing your risk tolerance is an essential component of building wealth with index funds. An investor's risk tolerance represents their ability to withstand fluctuations in the value of their investments, without feeling undue stress or the urge to sell. By understanding this level, you can create a portfolio of index funds tailored to your particular goals and situation. This, in turn, enables steady growth in your wealth over time, despite any short-term market volatility. Number 4. Read to stay up to date on market news. Staying informed about market developments and recognizing patterns allows investors to make well-informed decisions. This consistent engagement with market news fosters a deeper understanding of the myriad factors that influence index funds, and serves as a solid foundation in building wealth. With a combination of strategic investments and a keen understanding of trends, investors can capitalize on the potential to grow their assets substantially over time. Number 5. Choose a reputable brokerage firm. To build wealth with index funds, it's crucial to choose a reputable brokerage firm that suits your investment needs. A reliable and experienced firm can provide valuable guidance, access to a wide range of funds, and competitive fees. Working with a trusted name in the industry ensures a secure and convenient trading platform, allowing you to focus on cultivating a diverse and profitable portfolio. By selecting the right brokerage partner, you can effectively harness the power of index funds to generate substantial returns. Number 6. Check the minimum investment required. This initial amount can vary, depending on the type of index fund or investment platform utilized. By thoroughly researching and comparing different options, investors can make informed decisions about which funds best suit their requirements. Taking the time to understand these initial costs can greatly impact the long-term growth and success of your investment strategy. Number 7. Review the tracking error of the index funds. To make informed decisions, it is important to review the tracking error of these funds, which measures the discrepancy between the returns of the index fund and the underlying benchmark index. A minimal tracking error can indicate that the fund manager is effectively replicating the benchmark's performance, benefiting investors. Thus, understanding and evaluating tracking errors is crucial for investors who want to build wealth with index funds, as it can impact their long-term returns. Number 8. Understand the different types of funds available. In order to build wealth with index funds, it is essential to understand the various types available in the market, such as passive or active. Passive index funds aim to replicate the performance of a particular index, by investing in all its constituents, while active index funds seek to outperform the benchmark through selective stock picking and strategic trading. Each one has its own set of advantages and drawbacks, depending on the investor's preferences and risk tolerance. By carefully assessing these different types, investors can make informed decisions, and select the most suitable option for their long-term investment strategy. Interested in starting a business to create wealth? Click the links in our description box below. Number 9. Analyze the performance history of the index funds. By closely analyzing the performance history of various index funds, investors can identify those with consistently low tracking errors and, in turn, achieve better alignment with the underlying benchmark index. In doing so, they will be better equipped to maximize their wealth through informed investment choices, taking full advantage of the index fund's ability to mirror the market's overall performance. Number 10. Consider investing in a few broadly diversified index funds. Investing in a diverse portfolio is crucial for long-term financial success. One of the most effective ways to achieve this diversity is by considering investments in a few broadly diversified index funds. These allow you to build wealth over time, while minimizing risk, by spreading your assets across various sectors and industries. With index funds, investors can enjoy the benefits of market growth, without needing extensive financial knowledge or committing to active trading strategies. Number 11. Select the right index funds for your portfolio. To successfully build wealth with index funds, it is crucial to select the right ones for your portfolio. With the vast array of choices available, it's essential to carefully analyze each fund's management costs and underlying assets. By honing in on the key factors that influence the success of an index fund, investors can make informed decisions that will ultimately contribute to their financial growth. As a foundation, a balanced and diversified portfolio should incorporate a mix of low-cost, high-performing index funds to maximize returns and mitigate risk. Number 12. Rebalance your portfolio periodically. In order to achieve long-term financial success, it is important to rebalance your portfolio periodically. This not only ensures that your investments remain aligned with your risk tolerance and financial goals but also helps to optimize returns during market fluctuations. It's known to provide broad market exposure and diversification at a low cost. By regularly reviewing and adjusting your holdings in index funds, you can build wealth consistently over time. Number 13. Keep an eye on fees and expenses. Understanding the fees and expenses associated with index funds is crucial for investors who want to maximize their returns in the long run. It's important to carefully analyze the costs involved before committing to any investment, as even seemingly small fees can significantly impact your overall wealth accumulation. By keeping a close eye on these charges and selecting cost-effective options, you can reduce expenses and make index funds a more effective wealth-building tool. Number 14. Stay disciplined and avoid emotional investing. By remaining steadfast in your investment strategy, you can avoid making impulsive decisions based on market fluctuations or temporary setbacks. Striking the right balance between consistency and flexibility will allow for optimal growth, as well as grant greater peace of mind throughout the course of your financial journey. Emotions can cloud your judgment, leading to impulsive decisions that may negatively impact your portfolio. By sticking to a well-thought-out investment plan, you can mitigate potential risks and allow your assets to grow consistently. Number 15. Patience and a long-term mindset. This investment approach rewards those who are disciplined and consistently contribute to their portfolio over time, rather than attempting to time the market or trade frequently. By focusing on the big picture and allowing the power of compounding to work its magic, one can gradually amass substantial wealth. Embracing this approach not only promotes financial stability, but also encourages a disciplined investment behavior that will yield positive results in the long run. Number 16. Tax efficiency. By carefully assessing the tax implications of various index funds, investors can optimize their returns and minimize the financial impact of taxes. Diversifying investments in tax-advantaged accounts, such as individual retirement accounts (IRAs) and 401k plans, can also help to maximize the benefits of index fund investing. To ensure long-term financial success, it is essential for investors to understand and account for the tax consequences associated with their chosen index funds. We recommend you watch these next 2 videos on wealth creating.